Young people today are the first generation that will grow up poorer than their parents. Imagine it's 1970. Your grandfather buys a modest home for $20,000. He earns $10,000 a year, so that house costs him just 2 years' salary. Fast forward to today, and that same house is worth $300,000, but the average salary, around $50,000. Now it takes 6 years of income to buy the same home. This isn't just about real estate. It's about how the value of money has changed over time. Back then, the US dollar was backed by gold. This gold standard limited how much money could be printed, keeping inflation in check. But in 1971, President Nixon ended the gold standard, allowing the government to print money at will. Since then, the dollar has lost about 97% of its purchasing power. Think about that. What your grandfather could buy with $1 in 1970 now costs over $20. This erosion of purchasing power affects everything. Housing, education, healthcare. College tuition has skyrocketed. Healthcare costs have soared, and young people are finding it harder than ever to build wealth. But here's the twist. While fiat currencies like the dollar have been losing value, Bitcoin has been gaining it. Owning just 0.1 Bitcoin might not seem like much. But in a world where traditional currencies are steadily losing value, that small fraction could be a significant hedge against inflation. So, as we delve deeper into this topic, consider this. In a financial system where your money buys less each year, owning a piece of an asset designed to be deflationary might just be the smartest move you can make. And in this video, I'll explain. How much do you need to have 0.1 Bitcoin? What exactly are Satoshis? Why will your cost of living continually decrease if you hold Bitcoin? Why Bitcoin shares characteristics with the world's best assets? How Bitcoin's intrinsic value is constantly rising? And why you don't need to buy all your Bitcoin at once. If you're ready to protect your purchasing power and build real lasting wealth, keep watching. So first of all, how much do you need to have 0.1 Bitcoin? This exact value changes quickly, so it will likely have changed by the time you watch this video. As of May 14th, 2025, around 15:45 hours, the current price of Bitcoin is $103,319 US. Well, actually, one day after recording this video, Bitcoin came very close to reaching its all-time high, the highest price ever. I just wanted to tell you that. In fact, it may have already reached that price while you're watching this video. I'll let you keep watching. Bye. Therefore, to own 0.1 Bitcoin, you would need to invest about $10,331.90 US. That's not crazy money. It's easy to achieve. You know, if you watch this channel, you probably have much bigger goals than this, so please don't be discouraged by this amount, but let's put things into perspective to motivate you more. At current market prices, owning 0.1 Bitcoin might cost you a few $1,000s. However, considering Bitcoin's high volatility, this value could vary significantly within short periods. You can get a Bitcoin sale on the way. And here's another fascinating way to think about it. There will only ever be 21 million Bitcoins, ever. With the world's population approaching 8 billion, simple math tells us that not everyone can own even a small fraction like 0.1 Bitcoin. In fact, less than 210 million people could ever hold 0.1 Bitcoin each. That's roughly 2.6% of the global population. This scarcity highlights why having even this modest fraction of Bitcoin can position you ahead of most people financially in the future. But I'll talk more about that later on this video. The thing is, in the future, probably almost no one will own 0.1 Bitcoin. Isn't it tempting to buy at least a little bit? Sorry for triggering your FOMO right now. So, moving to the second part, what exactly are Satoshis? Think of Satoshis as the cents of Bitcoin. Just like $1 is made up of 100 cents, one Bitcoin is made up of 100 million Satoshis. They're named after Bitcoin's mysterious creator, Satoshi Nakamoto. Why is this important? Because it means you don't have to buy a whole Bitcoin. You can start by buying smaller fractions, making it affordable and accessible for everyone, no matter your budget. Buying Bitcoin doesn't mean spending tens of thousands of dollars. Just a few dollars can get you thousands of Satoshis, allowing you to gradually build up your investment over time. This is crucial because it allows everyone, yes, even you, to join this financial revolution at your own pace and budget. Now, let me make a disclaimer here. As I've said in many other videos, it's crazy to put all your money in Bitcoin. It doesn't make any sense and you shouldn't do it. I've been in the financial market for over 10 years, and this is the voice of experience. I've seen big bets fall out of nowhere and wipe out life savings. It's very sad, and I don't want that to happen to you. Do I believe the arguments in favor of Bitcoin? Yes. Do I put all my money in there? Hell no. I put less than 10%. Diversification is king. Just think that if it were 100% certain that Bitcoin would continue to be the most valuable asset, the most brilliant minds in finance, such as Warren Buffett, would only buy Bitcoin forever. The risk is not worth it because there are great opportunities out there besides Bitcoin. Of course, again, you should have at least a little bit in your wallet. Well, we can move move to the third part, where we'll discuss something important. Why Bitcoin's intrinsic value is constantly rising. Here's the thing. First off, Bitcoin's capped at 21 million coins. Period. Compare this to fiat currencies, where governments can print as much as they like, steadily diluting value. And expanding this discussion, think about it this way. Anything scarce that people want naturally becomes more valuable. Bitcoin is the ultimate example of scarcity in action. With approximately 20.5 million coins already mined, around 97% of the total supply, there are less than 500,000 coins left. Bitcoin recently underwent its fourth halving in April 2024, reducing the reward from 6.25 Bitcoins per block to 3.125 Bitcoins, further tightening supply. This isn't just theory, it's already happening. Major financial institutions are heavily investing in Bitcoin. BlackRock manages over $10 trillion in assets and successfully launched a Bitcoin ETF in early 2024, while Fidelity, overseeing more than $4.5 trillion, continues to expand Bitcoin investments to its clients. Countries like El Salvador have adopted Bitcoin as legal tender since September 2021, with more than 6 million residents actively using it for transactions. Additionally, several other countries, including Paraguay and Panama, have moved towards recognizing Bitcoin legally. The broader the adoption, the stronger the upward pressure on Bitcoin's value. Then there's decentralization. No single government or bank controls Bitcoin. Instead, a global network of over 18,000 nodes secures it. This decentralization means no central authority can manipulate or confiscate your assets, providing unmatched security and trustworthiness. Lastly, Bitcoin continues to evolve. Technologies like the Lightning Network, now supporting over 7,000 Bitcoins, worth roughly $400 million at current prices, and processing tens of millions of transactions per month, significantly boost Bitcoin's speed and efficiency. This improves its utility for everyday transactions, attracting even more users. These powerful factors, scarcity, rising demand, decentralization, and technological innovation, combine to continuously push Bitcoin's intrinsic value upward. Bitcoin shares characteristics with the world's best assets. Think about gold, real estate, or blue chip stocks. What makes them great assets? Stability, scarcity, value preservation, and growing demand. Bitcoin checks all these boxes. Like gold, Bitcoin is scarce and an effective hedge against inflation, especially given recent global inflation rates hitting peaks above 8% in recent years. Similar to real estate, historically appreciating at approximately 4 to 6% per year, Bitcoin has maintained a compounded annual growth rate, CAGR, of about 150% over the past decade, demonstrating substantial long-term appreciation potential. And like robust stocks, such as those in the S&P 500, which has historically returned around 10% annually, Bitcoin's value can significantly increase over time with broader adoption. But Bitcoin has unique advantages. It's easily divisible into 100 million units, called Satoshis, portable and accessible worldwide without restrictions. Unlike gold, which requires physical storage and security measures, or real estate, which demands significant maintenance and taxes, Bitcoin requires no physical space or specific conditions. This global accessibility and flexibility make Bitcoin an incredibly attractive asset, sharing and even enhancing characteristics found in the world's best investment opportunities. And moving now to the fourth and last part. As incredible as it may seem, your cost of living will continually decrease if you hold Bitcoin. But how? Remember the pizza story from Bitcoin's early days. Back in 2010, someone bought 2 pizzas for 10,000 Bitcoins. Today, those 10,000 Bitcoins would be worth hundreds of millions of dollars. While extreme, this example illustrates how Bitcoin's purchasing power has dramatically increased over time, contrary to the dollar. Let's do some math to put this in clearer perspective. If you had bought just 0.1 Bitcoin in 2015, it would have cost you around $25. Fast forward to today, and that same 0.1 Bitcoin is worth thousands of dollars. That means what cost you just a modest amount in the past now holds substantial buying power. This is the core of Bitcoin's deflationary nature. There are only 21 million Bitcoins that can ever exist, unlike traditional currencies that central banks can print without limit, continually driving up inflation. As demand for Bitcoin grows and its supply remains fixed, each Bitcoin becomes increasingly valuable. This means your purchasing power not only remains stable, it increases. Let's say today you put aside just a fraction of your income to steadily buy Bitcoin, even just 0.1 Bitcoin. Over time, as Bitcoin's purchasing power rises, your ability to buy more goods and services with the same fraction increases. Essentially, your cost of living in Bitcoin terms goes down. The groceries, fuel, education, and healthcare that keep getting more expensive in dollars will become cheaper for you when priced in Bitcoin. Real-world evidence supports this too. People in high-inflation countries like Venezuela or Argentina have turned to Bitcoin as a safer way to maintain their purchasing power. They've experienced firsthand how Bitcoin can protect and even boost their ability to afford basic goods and services despite their national currency losing value rapidly. Holding even a small amount of Bitcoin could mean mean you no longer just keep pace with inflation, but actively improve your financial future. Looking at longer-term projections, analysts from various institutions have suggested Bitcoin could reach an average price of $115,000 with potential peaks of $200,000 in 2025, making 0.1 BTC worth up to $20,000. This is why having even just 0.1 Bitcoin could change your life. Well, that's it, cousins. Stay invested until next video.